Thursday, October 13th, market analysis, Stan Ehrlich. What a day. Today is the October lows. I feel very strongly about that, and that's why I said it that way. Look at my charts that you have right in front of you at the moment. I've put a large green circle around today's price action so far. Now that's so far. It is very important that the closing today is higher than yesterday's close. We have to have that to have a bullish engulfing ER official buy signal. The spider has the exact same vertical bar that the QQQ has on the left. We have new lows for the whole bear market. We have sharply lower gap down exhaustion gap openings. We have a gigantic bullish engulfing. We were in oversold territory early in the day around the lows. And we have a high today higher for the spider than the previous 3 days, while we have a high this morning higher than the previous 2 days on the QQQ. That's a substantial reversal. What about the other indexes? As far as the Russell 2000, we have a minor little double bottom over the last 3 weeks and a broader double bottom starting in June and September and October. And a bullish engulfing. It's not green because it wasn't oversold, therefore it's not an official ER buy signal, but it's got all the makings and it is extremely close. So I like it very much, along with the fact that the double bottoms are present. We also have the DIA with a double bottom on a short-term basis over the last couple of weeks and a gigantic bullish engulfing. Again, it didn't quite get oversold, but that's divergence. New lows in price, but not a new low in the indicator. That's divergence. And our high today not only closes the gap I've been talking about for days, from last Thursday low to last Friday's high a week ago, almost a week ago, and it's higher than 4 previous days worth of highs. So we have a tremendous number of reasons to believe that today is the day, as long as the closing prices are above the previous day's closing prices. We're currently up 7 points on the spider. The range is 18 points from high to low already. Ladies and gentlemen, it's only 9 o'clock. We've only been open 2.5 hours. So there's plenty of time to get stronger, make new highs, and so on, but I have to say there's also time for it to go back down again. What happened this morning with that lower opening? Well, inflation rate was, I believe, 8.3. The marketplace was looking for an 8.1. It came out 8.2. Therefore, it was apparently disappointing to the market, and that's why the indexes gapped down rather substantially on the opening. But come on, just because it's 8.2 instead of 8.3 and 1/10 of a point higher than the expectation really is not a very big deal, at least in my opinion. And hence, the market begins to realize this, starts to come up, and does not stop. I would not be surprised to see this market close substantially higher than today's highs so far. Now, having said all of that, and I believe this is the October low today, we have a technical signal that allows me to tell you there's a good chance that we will come back down around the middle of today's price range, whatever it will be at the end of the day, during the next few days. So if you don't want to jump in and go long right now on whatever symbols, stocks, etc. you're interested in trading, or whatever is having a bullish engulfing along with the overall market, then a little patience for a day or 2 or 3 might be appropriate. Or you could add if the market dips down and you do buy right now, today, or you're already long. Okay, very excited about today's price action. On a scale of 1 to 10, it's really high up there, 8.5, 9 as far as confidence level is concerned. Again, as long as it stays higher than the previous day's close. Let's go look at some other stuff here real quick. Here is my October low chart that I've been showing you again and again for the last, well, over a month. And we're oversold for the second week on weekly data, and that qualifies. We don't have a bullish engulfing weekly price action. That would take quite a bit. You'd have to get above last week's highs. But who knows? It's not out of the question. We could have a very, very strong rally here. Maybe the Fed will say something encouraging. Maybe something else will happen. I am not a fundamentalist. Fundamentalist. That's a little joke I've got. Or economist. So I'm a technician. I call it like I see it, and I see it turning today. Next chart. Bonds. Don't have a current quote higher than yesterday's close. That would generate a bullish engulfing, and it might before the end of the day. Same thing for the 10-year notes. We have already had an outside trading range. Today's high is higher than yesterday's high. Today's low is lower than yesterday's low. That produces an engulfing. Right now it's a bearish outside down day. But again, if it closes higher, it'll be an important reversal, causing a couple of little double bottoms to develop. I already got one buy signal on September 28th, and if I get another one today, it will compound the potential bullish likelihood. How long is this move up in the stock market going to last? Typically October lows, 1 to 2 months. I am not trying to tell you this is the bottom of the bear market overall. I don't think that's true. I think it is a turning point for the market for a substantial short-term rally. A couple of months. But it has to go up a huge amount in order to turn the tide to a long-term bull trend. And I don't see that happening at this particular point. This is an excellent intermediate term, a month or two buy signal at the moment. Let's look at gold. Gold has an outside trading range. It's slightly lower on the day. Again, if it can close on a strong note, it'll have a bullish engulfing. And my buy signal is still good from September 28th. So I think gold is about to start another leg up, a little more of a rally, and make a new high on a short-term basis above 1,740. Let's look at forex for a moment. Now, the dollar index has another outside down day as we speak. That is tending to confirm the top of the market ER bearish sell signal on the high day, September 28th. Interesting that these things are around the same date, 29, 28 of September. For the dollar index and for the euro dollar, we've got a bullish engulfing at the bottom of the market on September 28th also. And today, guess what? Another, at the moment, bullish engulfing. A whole variety of indicators, charts, signals, setups are adding up to a major, well, maybe I shouldn't use that word, a very significant turning point in the markets for a rally that could last a couple of months. I'll leave you with those notes. This has been Stan Ehrlich on what I hope to be the October low date. Have a great trading day. Don't get too enthusiastic. Don't get too overzealous. Be objective about things, not subjective. Have a great day.